This all kind of confirms that the bull market remains intact, and there's certainly not any big risk right now that investors should be overly concerned with. Let's talk about what you need to know before the bell this morning. The seasonal buy signal, we've talked about this previously. There's a seasonally strong period of the year. There's a seasonally weak period of the year. The seasonally strong period of the year runs from October until May. Historically, the weak period runs from basically kind of end of May through September, early October. You've often heard this called the best 6 months of the year. And if you had invested only in the best 6 months of the year, historically, you've outperformed the markets enormously, because the weakest period of the years occurred during the summer months, and that's where a lot of the pullbacks have occurred. And again, we had that 10% correction last year in the middle of summer. We had a correction this year in the middle of summer, right? So not surprising. Well, Stock Traders Almanac has been working on this for a long time. They've been doing research and they've developed signals for this, but they've determined that you can apply some technical analysis, like everybody does, to this to try to time the beginning of that seasonally strong period of the markets. And on Friday, the markets broke out to a new all-time high, and we triggered a short-term buy signal again back onto the market. So again, in the short term here, markets have been doing fine. We went through this consolidation period. We've now broken out. We've talked about this a bit. We formed this kind of cup and handle pattern that we had discussed previously, where the markets had made kind of these two higher lows and then broke out of this kind of resistance level we've had. We then retested that support level, bounced off of that, have continued to break out to new highs. So this all kind of confirms that the bull market remains intact, and there's certainly not any big risk right now that investors should be overly concerned with. Again, markets are a little bit overbought here short term. So again, continue to manage risk in your portfolio. Just don't throw caution to the wind. But again, nothing really overly to worry about at the moment. And markets are set up well for moving into the end of the year. This is potentially going to turn out to be a very, very strong year by the time we get to year end, unless something happens post-election, right? I mean, there's certainly some risk out there that we need to be aware of. But right now, the trend is clearly positive, and markets are doing what they're supposed to do. Now, on a weekly basis, we can, and this is the important point, on a weekly basis, we have now triggered a buy signal. And again, weekly data kind of slows things down. And back in June, we were talking about some risk to the markets and said, hey, this market is likely going to go through a correction, et cetera. We're going to have a 5%, 8% correction or whatever. And that was because we were triggering a weekly sell signal at that time. And again, then markets sold off. We've now triggered this buy signal again as the markets broke out on Friday. Now, this also corresponds, this buy signal on a weekly basis, which is much slower to move, also corresponds with the beginning of the seasonally strong period of the year. So we now have a stock market buy signal on a weekly basis that corresponds with the beginning of the October, or really kind of the seasonally strong 6 months of the year. This suggests that right now that markets will continue to push higher, at least into year end. Again, we also have the effect of buybacks coming back, etc. So at the moment, there's not a lot of risk in the markets other than just markets kind of continuing to grind their way higher. Now, they're not just going to shoot straight up, but again, I would expect the markets to continue to kind of bounce their way higher through year end. That's what you need to know before the bell this morning.